This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. And today is my first trading day of August 2025, and you can see that right off the bat, I've already dug myself into a hole very similar to what happened last month, but it's nothing that I can't come back from because I came back from what I did last month. But I put myself in a similar situation, almost the exact same situation, on the exact same kind of day that put me into that hole last trading month. So what is it? Well, today is Monday. There's no news driver, and the conditions are just not optimal for my trade model. If you traded today, you probably could have caught a nice long, probably rode that for like over 100 handles, but that's just not my model and simply not what I'm looking for. My model, my approach to price told me to be bearish today, so I was, but I held on to that idea, and that is what led to the destruction. So let's get right into it. So today is Monday, August 4th, 2025. The net P&L today is negative $790. Oof, that's a big one, right? If we look how we started out last month, look how we started out last month though. 1, 2, 3 consecutive red days in a row. The following week, I was able to pull myself out of that hole. So my risk is managed. It's nothing that I can't come back from. I'm not down mentally. Yeah, it sucks that I've done this. I've hurt myself on a day that I probably should have done nothing at all. But it's nothing that I can't come back from so long as my risk is managed. I'm only down 2R. I'm only down 40 handles. One winning trade for me is easily over 50 handles. One winning trade and I can dig myself out of this hole. So I can't get down on myself. I have to think in terms of how I'm going to perform for the month, not just this individual day or even this week. But obviously I have to work on avoiding these kind of days in the future. So I thought the draw today was this week's new week opening gap that was not used a lot before price engineered low resistance sell side and is in close proximity to previous day settlement. I saw multiple strong reasons to trade that way lower. So the higher time frame narrative that I established today was based on how last week's candles closed. I thought price indicated it wanted to reach the obvious gap on the weekly, and I was not convinced it's going to do a shallow run on the early July sell side and rally for a new all-time high before it gets to that gap. I really like how it's painting higher on the weekly range first. And how is it going to get to the draw? Well, I would like to see it offer the gap that's congruent across the 4-hour, 1-hour, and the 15-minute to fade the low resistance sell side from the overnight and pre-market session. So I was looking for my bearish premium gap opening setup if price rallies up at the open and delivers the obvious gap seen across multiple time frames. All right, let's go to the chart. So what I was thinking, basically top down, let's run it. So on the weekly, obviously last week's candle, large down close candle, right? Comes just shy of closing over that candle's open price. Maybe why we did this first. Now, I'm not sure if we're actually still bullish or bearish on the week. It's just Monday. But usually when we have a large update on Monday, that tends to put in the low of the week. But how last week's candle closed? Large down candle, right? So at this point, I want to see this candle open, trade up into this range, and then trade down for this gap. I'm thinking how this candle closed tells me that it wants to reach for this obvious gap. And I want to see it do this, trade down into this before it makes a new all-time high. Not really thinking that it's just going to stop right here and then rally for a new all-time high. So on the daily, here's where I mentioned that I was not convinced that the shallow run on sell side was going to put in a low and then see the market make a new all-time high from there. See how it just barely went below that candle's low, only by 4, almost 5 handles. I would like to see a deeper run below that, drop into that gap, and then see if it can rally for a new all-time high. Obviously, it didn't do that. Say we just overlapped the previous daily range. We just overlapped Friday, running right from the start of the session. So let's go to 4-hour. You can kind of see what I was thinking before the open. If I go to the 4-hour, where's the 4-hour? 1 hour. 1 day. Why is this out of order? Bear with me. All right, 4-hour. Cool. So you can see right here my annotations. The annotations in pink indicate what I'm thinking in terms of the higher time frame narrative. The annotations in this light blue indicate the draw and liquidity. Annotations in this blue indicate my point of interest that I'm anticipating the market to reverse. So here I'm pointing out the obvious gap. It's on the 4-hour, 1-hour, and 15 in a premium relative to Friday's range, not this dealing range, right? And I really like how price is seeking a premium Friday's range without taking the low, moving away from that gap first. My draw that I established today was previous weekly low and the obvious gap below that. Not convinced it's doing a shallow run on this sell side. So back to the chart. Now, obviously, that did not happen. Why did that not happen? I had to ask myself at the end of every single trading day, if I get the bias completely entirely wrong, I have to do a thorough study on exactly why I was wrong. Well, I'm thinking I'm probably wrong in this case because where the market opened at was just simply in a deep, deep discount of this dealing range, which is why I marked this midpoint of that range from that high to that low. You can see the midpoint. And this is the 6 o'clock candle, right? You see how far down it opens in a discount. It makes sense for it to want to push up back into a premium, regardless of if we're bullish or bearish, because we also have this open gap in a premium. So that would be a better point for the market to trade up into and then see if it can trade lower if it's going lower. Right now where it's at, not really sure what we want to do. Probably going to have to wait for more information tomorrow. Now in the hourly, see there's that gap that was in congruence on the 4 hour. It's also there on the 15-minute. So based on my model and the setup that I look for my bearish premium gap opening setup, all the criteria was basically there for that model, for that setup. It just did not play out today. It did not play out today, I believe, because of where the market opened in relationship to the higher time frame dealing range in a deep discount. That's the number one reason why I framed my bias as incorrect today. And it's also Monday with no news driver. So typically on Monday with no news driver, either the market does nothing and it stays flat and it's not worth trading at all, or we just see these one-sided moves that just come out of nowhere. In this case, we have a one-sided move literally right from the Asia session. The Asia session made the low of day and it settled on its high. So on Monday with no news driver, we either do days like this or we literally do nothing at all. Now in this case, we just went, right? Really no way for me to even get on side with it, even if I was bullish on the day. It just left right at 9:30. Now, an indication that I probably was going to do that and that the market was not setting up my bearish premium gap opening setup was how it treated this consolidation range right before the open. You see, we have this consolidation range, right? We have a large up candle here. We have this separation here. And then right before the open, right before 9:30, we lay a large up candle over the high of this consolidation range. And that confirms that the market is strong. It's likely going to leave this range and reach for something above the market price. But I actually wanted to see it reach for this first. How it laid these candles across this gap tells me it's not going to reverse there. It's not going to do it. But I held on to that idea. Matter of fact, I was so confident in that idea that I prematurely sold short before I had any confirmation. My first losing trade of the day, down 2R today, my first losing trade was because there was no confirmation across. Well, there was confirmation on the 5-minute for my trade model, not on the 15, not on the 1. So the first short that I had was within the 9:30 candle. Sold short as it's developing, so no confirmation from the 15-minute. On the 5-minute, I like how this candle traded up into the low of the gap, but closed below it, also closed below the AM session high from Friday, and now it's in a premium of Friday's range. On the 1-minute, though, if you check out this execution, you're going to be like, what are you doing, dude? What are you doing? Okay, so there's loss number 1. What am I doing here? What am I doing here? Absolutely nothing. Let's review why. Why did I take that trade? Not this one. This one, okay? Why did I take this setup? Well, I saw the 9:35 5-minute close below the hourly SIBI. So I was keying up on a reversal. The 940 candle then opened with no lower wick, then painted bold face down, and I sold that short at the market. For some reason, that really enticed me to sell short. So typically how I see candles paint when they close down as a bearish candle is they will open with no lower wick, trade up, something like this, right? Open with no lower wick, trade up, and then reverse down. And this candle was doing that. And then as soon as it just closed lower, I just impulsively sold short. Not what I do to get into a trade. Obviously, you can either do that or it can literally just close near its high, and that which just confirms that the market is super bullish, something like this, right? So if we pull up the recording, oh, that's a take 1 right there. Ignore that. All right, let's see if we can find it real quick. That was around 9:45. All right, so this is extremely impulsive. Might want to cover your eyes. Don't watch. It's extremely impulsive. Fast forward a bit. Okay, so I see how this candle's closed like that, right? And then not good, not good, not good. So obviously I was a bit overconfident in this idea because it checked all the boxes for my criteria to sell the market short for my bearish premium gap opening setup, which just means the market has had a premium gap opening. It's gapped up versus where it settled yesterday at 414 in regular trading hours. And I'm looking to fade the market as it opens and trades higher. So today we opened and we traded higher into the area that I was looking for a reversal above the AM session high from Friday. And in that gap that's there on the 4 hour, the 1 hour, and the 15 minute. Now I see this 5 minute candle close. I get a bit excited. Look at how this is painting, right? It trades up first and then snapped down. Wait for it. Like that. And then I just sold short. Okay. Not good. So it's obviously not my entry model at all. It's no entry model at all. So what is causing this impulsive trade? I believe it is my overconfidence in this sell idea that I had coming into the market because it checked all the boxes, right? But there are some clues that tell me that this is not likely to play out. Like how on the 15 minute, the market left the pre-market range like this. This is not what it looks like when I have my bearish premium gap opening set up. It should not look like that. It should leave upper wicks like this and then trade above this candle's high and fail. It's not going to lay a large up candle over the pre-market range. It's not going to do that. And then also if we go to new day opening gap, okay, ignore that. We'll pull up another one real quick. All right, we're back. Cool. So if we go to my new day opening gap layout, we can see that the new day opening gap from Friday on the 31st of July, right, hasn't really been used much. We traded down from it, traded up through it, back down below it, not much. And look above that. What else do we have? We have this new day opening gap and this new day opening gap. They're in close proximity, so that makes that a really strong draw. Now below the market price, we had this new week opening gap, not really used at all. It's still lacking sell side delivery through it, right? So this is still hot. This is still a strong draw. And that's what I was aiming for today based on the market criteria, based on how we were opening high on the day. That's my bearish premium gap opening setup. So it checks all the boxes. It's just the higher time frame market criteria did not make sense for this because of where it was located on that dealing range. This is the stronger draw today. And it makes sense for the market to trade higher today since we've dropped lower so much, so fast, Thursday and Friday. Everybody's going to come into this day looking for lower prices, as I was. It makes sense for them to squeeze it against everybody who's trying to sell this thing short, right? So that's why that was incorrect. My bias, now trade number 2, is also not in the optimal location. So here's trade number 2. And at this point, let's see how I was feeling exactly at this point in time. Let's go to the daily journal. How was I feeling exactly at this point in time? At 10:15, mentally, I'm starting to decline, sitting here trying to fade this. Feels like what I used to do back in June. There is still nothing in the chart that tells me this should go lower. The touch consequent curve is not bearish at all. Volatility is also leaving because it's Monday with no driver. 10:30, really fucking tired, really fucking bored. Why am I still here? Hoping this thing goes lower. Candle still have not left the gap. Okay, so obviously you can see within that period of 10:15 to 10:30 and beyond, I'm mentally checked out. I'm lacking focus. I'm lacking energy. I'm growing tired. About to fall asleep. The only reason I'm sticking around is because I'm trying to make something out of this session. I'm trying to fade what I know is clearly bullish, which is a mistake that I made over and over and over again back in June. I would have a bullish bias. I would come to the market with a bullish bias, but it would just leave right at 9:30 and literally give me nothing to do but stick around and try to fade that move that I planned for late in the morning session. Here I was doing the exact same thing. The only difference is I was actually bearish on the day looking for lower prices, but my bearish bias was confirmed wrong by the close of the first hourly candle. I should have been gone for a really long time because number one, it's Monday with no driver, so I know that there's going to be like that sudden injection of volatility in the opening range. It's going to deliver up until 10 o'clock, and then it's just going to die out. But the first hourly candle at 9 o'clock is fat. as fuck. And it's basically laid across the entire gap right here, right? That right there tells me we are not bearish at all. I see this. I'm still looking for lower prices. I'm still holding on to my bias. That is the mistake today. I should have done nothing at all. Now, trade one shouldn't have been taken. Why? Because it was impulsive. Trade number two also shouldn't have been taken. Why? Because I was mentally checking out and I knew this thing was clearly bullish. I knew there was no reason for it to go lower. Hung on to my idea, hung on to my bias. Not optimal, not ideal. And this doesn't even fit the parameters of something that I would execute on because it leaves smooth highs above. I know that whenever I execute with smooth highs left above, then the market tends to come back to that level, stop me out. So this move lower never even goes anywhere at all. It just hangs around in this gap. Then we slowly grind higher, and then eventually we push up, and we settle near the high day on this range. So look at the market just dies out after 10 o'clock. If we drop a horizontal line or a vertical line on 10 o'clock, it delivers up until 10 o'clock, and then it dies. Why does it do that? Why does it do that? Interesting. Very interesting, huh? Well, it's just the typical condition on Monday with no news driver. This shit happens all the time. Obviously, how the opening range traded indicates that this thing wants to go higher, but I'm bearish on the day, and I cling on to that idea. So today's a good lesson about, number one, when setup selection, right? When is my bearish premium gap opening setup likely to be there and probably check all the boxes but not play out in a situation like this, where it's in a discount relative to the higher time frame dealing range? Doesn't make sense. There's a lot of reasons for the market to want to go higher. These new day opening gaps that we have above. And we're still pretty much bearish on the, or not bearish, bullish on the higher time frame, right? The second trade could have been avoided entirely by noting that first close on the hourly candle at 9 o'clock and thinking, okay, yeah, this is not bearish at all. I'm going to fuck off. I'm going to do something else. Not only that, but it's Monday with no driver. So I know that the volatility is likely not to see. It's not going to stay there. It's Monday with no driver. It's probably going to die out, and it did. So not the ideal session to start the month, but I learned a lot, right? I'm learning a lot about my model, what my model requires. My model demands from the market really clear conditions. It demands a clear read on the development of the weekly range, which is always pretty much a guess early on in the week, Monday, Tuesday. It's not really clear and so obvious until Wednesday, Thursday, and Friday. Those are the days that I'm strong. Those are the days that I trade better. I am extremely weak early on into the week, Monday and Tuesday. And I've learned this by doing my monthly review. Just did my monthly review today. Because the development of the weekly range is not clear to me, I don't have a good idea of how that weekly range is likely to deliver. When I do, that's when my model works, because my model is basically an intraday swing model where I'm trying to catch the real move of the morning session and ride that out for the rest of the day for over 100 handles, or probably hold on to it for a duration of at least an hour minimum. In order to do that, it requires that I have a really good understanding of how the weekly range is developing. And on Monday with no news driver, it is not an optimal day to operate this trade model at all. So what I'm going to do now is literally completely eliminate trading Mondays with no news driver at all. Because why would I trade on a day where conditions are likely to be shit and I know it's not a day that's good for my model? It just doesn't make sense. So if I eliminate my trading days down to only 4 days a week, I'm doing less. I'm focusing on selecting higher quality setups. I feel like it's going to be a change that I need to do. Same thing with Tuesday. Even on Tuesday, some days the direction of that weekly candle is not really clear. But it's really clear on Wednesday. That's usually when the higher low of the week is in. Thursday is usually continuation. Friday either caps the weekly range or it's also a continuation. It's not difficult. Maybe eventually further down the line, I'll get better at reading the weekly range on Monday and Tuesday. But for right now, I think it's better to just eliminate those trading days. Let's see what we got tomorrow. Tomorrow we have a red folder, so I'll possibly trade tomorrow. But look at the calendar this week. There's nothing on the calendar. So what is this week going to do? Well, I'm thinking it's probably not going to do much. So not an optimal week for my trade model at all, right? I have to have like a good, clear direction on the weekly range, which is what I had this week. That's what I didn't have here. Monday, Tuesday, both of these days had no driver. I traded them, and I got wrecked. Right? Friday, the development of the weekly range is so clear to me. It's so easy. I take it nice, easy, long, so easy, so bread and butter. 63 points. Thursday, here, I had the bias right perfectly. I was so confident in it that I broke one of my rules, executed pre-market, and just cooked the entire session. Wednesday, here, this was how the market delivered here confused me on what it should deliver, but it ended up still delivering my draw on liquidity. So dialing in on these mistakes, figuring out where I'm going wrong, becoming more and more adapted to my model and what it requires of me and of the market, and continuously getting better each and every day. So that's it for this one. I'll talk to you guys tomorrow.